Hello again, traders, and welcome out. This is Ankit here, and we'll be covering the currency midweek for February the 15th. Can't believe already halfway through the month. So there's definitely been a much exciting month so far, compared to what we saw in the month of January. January, we saw a lot more of quiet, very small range bound moves. But lately, I've talked about this in my recaps a bit lately, and there's definitely has been good movements. So it's really all about using the right strategy in the right market environment. That's really the key here. Our the movements are there. We just our job is to capture the move. So let's see how the markets are developing so far, and look at some data points that are definitely interesting that we need to keep in mind, and take a look at where the trend weakness is. So this week markets are in the consolidation phase, but again, overall, what we are noticing is that the equity markets are holding on to the uptrend. We are not really seeing markets giving up that 20 and the 50-day moving average. The markets are not really giving up the prior resistance, which is now the support. So overall, we don't have that big risk on and risk off in the markets. So, but on the other hand, we do need to kind of keep an eye on the yields and the U.S. dollar, because the yields are rising and so is the dollar. All the data points recently that we have gotten so far the last 2 weeks, either it's the strong US job reports or the retail sales number or the CPI. Everything is really supporting for the Fed to further continue with the rate hikes. So we are just seeing this little moment here where maybe the equity markets are a little bit delayed, but the big moves will happen when all these markets are participating. Right now, outside of the equity markets, we have the bond market taking part of this move, dollar, even gold and silver. In particular, gold and silver, they were more like a hot commodity just a month ago. For the entire month of January, the moves were pretty good. Now we are seeing those kind of pull back as well. So keep an eye on the equities. If we start to give up some of the key levels, I think that's where the big move will happen. But outside of that, I think we'll just continue following the dollar move here. So if outside of the dollar, we definitely had a good breakout this week in the Japanese yen. We've seen the Japanese yen actually did break down, but outside of that, a lot of the currencies are just in a range bound condition. So something to keep in mind, especially if you're trying to figure out how aggressively you want to approach a currency. So we will be focusing on what currency is really in play, and really kind of ignore or put it on the sideline the currencies that are just not taking part in a lot of these moves. Now, economic reports so far, again, we had the retail sales number today. We look at that. Core retail sales 2.3 versus 0.9. And I know this is where I get this question all the time. I thought 2023 is going to be entering a recession, and it doesn't seem like the data points are suggesting so. And that's absolutely right. All the data points, job market is strong, people are spending money. So this is not the contractionary zone that we are in. But that's also a bit of a headache for the Fed, because remember, the Fed is trying to induce a recession, trying to cut people's buying power by continuing raising rates. So we're kind of the same boat as we were last year, where everything is fine, but the central bank continue to raise rates, which is again a bit of a gravitational pull on everything out there. So it looks like the dollar long will still be continuing to our play here. But outside of that, I don't really see a whole lot of breakout happening. So let's pay attention to the equity. So far you can see the equity markets, 0.95%. World Stock Index is up. Cryptos are surprisingly up. So everything on the equity front is up. But look at the move in gold so far. It's 1.8% move to the downside. Now, this is just a byproduct of what we are seeing in the dollar, which is again a good sign for the currency traders, because we had dollar being dead for the most part for the last 3 months. Since November, the dollar has been, every pop has been sold off. Now every little pullback is a big bot, and I talked about this just a couple of weeks ago, that is this a time to change that approach, because a lot of times we get married with one approach, everything is working, and suddenly you have that pivot where it just stops working. And I think we definitely hit that point where it actually did stop working. So now I think we need to shift that focus, and we really need to be looking at dollar more to the upside, similar to what we saw last year, until or unless we start to get some really bad data. So we have this little love and hate relationship between the data and the dollar. So you really have to kind of go with that until the next FOMC meetings that will kind of give us more indication of where the markets or where the Fed is really thinking going forward. So let's see, taking a look at the equity markets, you can see that this is what I was pointing out to. I mean, we have been this massive downtrend, but one thing you got to keep in mind, I mean, last year we got a lot of these rallies that really were aggressive, 20% off the lows, and we did pull back. So each of these moves were actually sold off. So I mean, if you really look at the percentage change from the bottom of October to where we are now, I think we are above that 20% range. But so we're definitely sitting at a good point where we could see a sell-off. But I mean, for that, what we need to see, I mean, exactly what we saw before. We saw these rallies, kind of give up, and they gave up the 20-day moving average, 50-day moving average. We want to see these rallies to be sold. Right now, we're not getting that. So this is a consolidation phase. In a consolidation phase, you really need to be right in the middle, not too aggressively bullish and not to be aggressively bearish. We can be mildly bullish or mildly bearish. But as soon as we get a big move, which is again either breaking out to the upside or breaking down off this 20-day moving average, this is where you need to get aggressive. Again, there's a saying out there, the power of a trader is not predicting the markets, but reacting to the unexpected. So you really need to be prepared. Whenever you see that, you got to move on. You got to follow that. And I think that's where I am, and not really being, too optimistic or too pessimistic here. We really want to be right in the middle. And unless we break those levels, we will get aggressive. Now, let's take a look at the movements today. I mean, so far this week, I mean, look at the yen. And I highlighted that with the yen, that you really have to pay attention to the currency baskets. And when you get that break, now that's a good sign, because we are seeing not just a move in dollar yen, but we're seeing a move across the board. Now, dollar yen had a nice continuation from just a week ago, where we had the U.S. jobs report and everything just kind of turned around for the dollar yen. I mean, look at that continuation. Yen is continuing to be on the weaker side, and as far as the currency basket suggests, it looks like the yen probably heading lower. While if that's the case, we're seeing a negative correlation with the dollar, and dollar is actually heading strong. So I mean, look at this week. We actually have a 2.5% move in dollar yen, and we just broke above a key 20-day moving average in dollar yen. We'll be taking a look at, but that's a pairing. These are the two currencies that are actually on the run. Outside of that, I mean, look at the percentage change. I mean, Kiwi is just flat on a basket for the week. Aussie is slightly up. CAD even a slightly up. Pound even a slightly up. So there's a little bit better performance between Euro and Swiss franc, but again, they are not really diverging as well. So the big movements are really if you're pairing, let's say dollar yen, you're pairing Swiss franc yen over Euro yen. Really, that's what the big movements are. But if you're trying to pair up, for example, Kiwi against the CAD, again, not a big mover. Aussie against, let's say, CAD, really not a big mover. So percentage-wise, you really have to be careful about your picking the currency pairs, and always focus on what's moving rather than what you think is going to happen. I mean, I've been watching Euro Swiss franc for the most part, but guess what? I haven't really seen a move that would really get me excited. So that's a time where you just put things on a bit more on the sideline, put on your watch list, but not really looking to trade. And the only movements that are really happening is in the dollar crosses, it's in the yen crosses. So I think that's really where the focus should be until we see a change in the markets. Now let's take a look at the crypto world, and I was definitely surprised with the little bit more of the relative strength that we're seeing in the crypto market. But remember, crypto markets are in the consolidation phase as well, which means they do go up 4.5%, and then they fall back to 4.5%. So they're not really moving in a direction. It's mostly going sideways. So you really have to understand that we want to stick with the range until it really breaks out. And this is where your strategy comes in play. Am I looking for continuation, or I'm looking for a back and forth? And lately, the back and forth is really what we're seeing in the markets here. So let's do a quick market analysis and see, okay, where we are on a scoring level. So markets are still at a +1. I know we are above the 20 to 50 moving average, but the velocity has sort of decrease. I mean, look at the drop in the ATR. This is the ATR for 10-day, which is a 2-week. You can see that we are sitting at the lowest of the ATR in 2 weeks. So consolidation. This is the time where if you are a directional trader, you want to see those big moves. This is the time you want to keep the powder dry. Again, the economic reports are not really that bad. If you really look at look at Canada's jobs report. That was much stronger than expected. Look at U.S. jobs reports. It seems like the labor market is not really affected as much yet. So I think if you're really trying to figure out if this is going to be a strong jobs report versus weak jobs report, right now I think I'm looking at the odds here are there are probably better chances for the jobs report to be better than expected. So I think this probably is still a decent report. Not really expecting a negative report. Now the PPI is coming out on Thursday. This is another indicator where if this is a hotter number, that will be bullish the dollar. If this is a weaker number, that will be bearish the dollar. So I think another opportunity for dollar crosses will be tomorrow for the PPI. But for tonight, I think Australian dollar, which has been a bit more on the on a bit of a sideways trade here, I would expect a move either way depending on what the number comes out. So there's still good opportunities left. I mean, we had a very good move in some of the currencies this week. I mean, especially in the dollar. But I think we can take a look at Aussie and the dollar tomorrow for our good trades ahead. But remember, I'm still looking for things in a range bound and not being a little too aggressive as far as my strategy goes. So let's just jump right into some charts here because this is where I want to spend a little bit more time on looking at other things. So let's actually go into take a look at the yields. So one of the things that you'll keep hearing is how inverted the yields are. Now, this is a 10-year, 2-year yield differential. And you can see that the difference. And we are so extreme level. And I think this is what's the scary part of where we are in the markets because you can see in any history, let's go back to the 2000s. When we start to see these yield differentials start to rise, I mean that's what the big move collapse that happened in the equities. Now, same thing back in 2007 when this thing started to rise, this was a big collapse here. So I think until this yield start to kind of return, we probably would not see a big collapse in the markets. But that's the one thing to really. This is a bit of a flashing warning sign for anybody out there that looks at the data point that hey, things don't look that exciting. I mean, for the short term, I know traders are excited, markets are doing better, things are rising. In the short term, things feel better, but this is also sort of flashing some warning signals that hey, maybe in the near future we could see a potential bigger move than what we have seen in the past, 12 months. So let's take a look at the yields right now. Now, let's take a look at the 10-year yield. So US 10-year. So you just type in US 10-year in your trading view, and you'll see that the yields are actually start to kick back up. I mean, they did test this 200 moving average. Remember, since November, dollar has been stuck in a rut. But I mean, so are the yields have been kind of pulling back as well. So we did see a rally in these yields back in December, but we didn't see a rally in the dollar. Now we are seeing a bit of a broader move where the yields are rising and so is the dollar. So I think if you really want to take a look at this, I would say the dollar outlook looks much better now in the short term, especially if you look at the chart here. Things were rough for the most part, but I mean, look at that. We got a rally here, we got a consolidation phase here, and look at the nice little movement up here. So I think at this point, I would rather be looking for pullbacks in the dollar to buy into. So if this is the confirmation, I mean, like right now, we after a consolidation phase here, we just kind of breaking out here. So this could have a further continuation if we just continue to hold on to the gains and start rising. I mean, on a daily chart, I do like this dollar long trade. But remember, this is a breakout strategy. So for a breakout strategy, now you need a follow through. So this is where you just have to kind of understand if I'm looking for a follow through, I need a confirmation. So I will be looking at this candlestick at the end of the day and see what kind of confirmation that we can get, especially overnight into tomorrow. But I definitely do like buying these pullbacks into the dollar here, so which is a bit of a change of that tone that we have been following for the last 3 months. Now let's take a look at the yen, because yen is the one that, as I've said before, pay attention to the currency baskets, and when you see these breaks, those are good signs that yes, it's ready to actually break more on the broader scale. Now you can see that the yen basket has broken, and I personally think that right now it does have a little bit more downside risk, but we probably have a little bit more support coming right in here. But I think right now, if you take a look at the correlation between the dollar and the yen, if the yen continues to go lower, I mean, we are turning corners in the dollar yen as well. So this is again one of the reasons why I like the dollar long, but I actually like the yen short as well. I mean, take a look at that. I mean, since November, we really haven't broken above this 20 to 50 day moving average. So this is where, if you were a bear all this time on the dollar, it's a good time to reevaluate that, because maybe yen will be coming back in play. So right now, look at the moving average, 20 and the 50 moving average. I mean, at this point, any sort of pullbacks could be just a buying opportunity. We broke this resistance between that 132 to 133 area. We are now heading back into the resistance from previously. For a further continuation on this one, I think this can easily get towards that 138 area. Like this is the next resistance level. So if you're looking for a continuation, I think what we need to look for is sort of a sideways, sort of a consolidation after a big run, and then you see another run higher. So if this is again looks like a little bit extended here, I would love to see a bit of a pullback to buy into. Remember, in a directional trade, you want to be looking for pullbacks. In a sideways trade, you want to be looking at the support and resistance level and sort of, play a back and forth between that. So always answer that question first. Is it directional or is it in a sideways range? So dollar yen is on my list here on a further long, especially going breaking above this level. I like the fact that after some consolidation, we kind of broke above that 133. So I think any pullbacks will be sort of shallow. I mean, we are rising. Look at the moving averages are rising. So this could be a nice directional play in the next 20 to 48 hours. So this is the one that goes on the top of the list here. But outside of that, I mean, let's take a look at Aussie. I mean, I had a question here. What do you think about Aussie USD? So let's actually study Aussie basket first. So what is the Aussie basket telling us? I mean, if you take a look at the Aussie basket, I mean, we are still trying to reject this downward trend line that we have, in place. So it's a very messy directional trade right now. Remember, the best moves we get is when both currency baskets are moving. So right now the dollar is moving, but the Aussie is not, moving in a nice, consistent directional way. I mean, we try to break out above this level, and then here we are. I mean, on a daily chart, breaking lower. So Aussie USD has been a good candidate to sort of sell on the rallies. So any sort of rallies that I see in the Aussie USD, I think could be a decent opportunity. Let's take a look at the Aussie USD pairing. So you can see that the Aussie USD pairing for the last sort of week or so is stuck in this range, and this is a bit of a wide range. On the bottom end, it's about 68.80, 68.70, and on the upper end is about 70. So that's the range that you're dealing with. I really like this, especially if it starts to break further lower. As you can see that the prices are still stuck in between the 20 to 50. So be careful if you're looking for Aussie USD on the short side. I would want to see this break as a confirmation. And once it breaks that level, I think the next level support that I see is about 66.70 area. So that's the area that we'll be aiming for. But I mean, right now you can see in the last few days it's been going back and forth. Whenever I see that, you need to kind of understand I need a little bit more confirmation on a further breakdown towards the downside. So I still like the Aussie USD on the short side. But here's a question you get: why is the Aussie not breaking lower? Well, if you look at the world stock markets, they're holding steady. Equity markets holding steady. Aussie is usually a good sort of gauge between the risk on and risk off sentiment. So right now, we are not really seeing those big moves in Aussie and Kiwi. They're just holding in that level. I mean, look at the Kiwi here, just going sideways for the most part. So again, this is another example of a currency that you don't want to be too aggressively on, but use the support and resistance levels as a gauge on where things are. Every rally, it seems like a good shorting opportunity in the Kiwi as well. So as long as the Kiwi stays, as the US dollar stays strong, I mean, I do like shorting the Kiwi dollar, Aussie dollar on those rallies. I think they're good opportunities on those rallies here. Now, let's talk about currencies that were I was definitely excited for going to this week, and that was Canadian dollar. So if you really look at the Canadian dollar, I mean, things have been rough for the CAD, very similar to how things were rough for the US dollar. So we are seeing that little turnaround, and they're kind of following, the CAD is really following the US dollar. So, I mean, right now, I do like a further continuation on these CAD as well. I mean, we are breaking above the resistance. So this is another currency that I do like on further upside. You can see that even a day like today, it's actually showing relative strength. So if the dollar stays strong, it seems like the CAD will kind of follow that suit. But the question really is that why should I go with the dollar with the CAD if the US dollar is strong? And that's a good point. We are not seeing CAD really moving independently as much. So I think the better pairings are really between, in the dollar crosses. I mean, we can see the difference like Aussie CAD. You can see that. I mean, if the CAD start to move more aggressively than the US dollar, I do like Aussie CAD on the downside and even Kiwi CAD. Notice that, they had some massive runs in the last quarter of last year, and you can see that things are kind of rolling now. We are no longer in that bullish phase. And again, this is the reason why I do like to sell the Kiwi and the dollar in the Australian dollar on those rallies because even again against the CAD, they're kind of losing that touch. So either you pair up accordingly. I mean, if we have Canadian data coming out, I don't mind taking a look at these pairings, but let me look at that turnaround that's taking place across the board, which is again a bit of a game changer based on what we have been seeing for the last 3 months. So let's say if I want to go long something, what do I do against? I mean, if you look at the yen is moving lower. So let's talk about what we like to buy outside of the dollar. Let's take a look at the British pound. Do we like British pound? If you look at the daily chart, that again, the answer is no, because we are seeing selling on the rallies. We're getting a couple of days of upside, but then overall, if you see the trend is kind of heading lower. So pound, I would say more selling on the rallies. So at the end now, we are only left with the Swiss franc and the euro. If you look at the euro has been a very, very choppy trade. I mean, look at that. It's just hanging on the thread. This is between the support and resistance. And I think this is where you want to be. If you get close to the support, you want to be looking for a long. You get towards that resistance, I'll be looking for a short. So I think that's my game plan here to tackle this kind of price action in the euro. Swiss franc is another tough one. If you take a look at it overall, this thing has not gone anywhere for the last few months. So guaranteed that this will have a big move once it really breaks out of this massive range. The question is, what's the timing on it? And that's really the tough part of these some of the currencies that we just don't know the timing. I have it on my watch list, but they're just consolidating. I mean, let's use an example of Katz's franc. You can see the Katz's franc for the last 2 months is just sideways in a very narrow range. Look at the volatility. We are sitting at a low volatility. We're no longer in that volatility environment that we were last year. We're just sitting in a very low vol. I mean, take a look at the weekly chart. I mean, this thing has only moved about 100 pips within for the last 2 months. I mean, that's a very small range. So you want to go with things that are actually moving much better. I mean, look at the weekly chart. This volatility, the ATR is just nothing but on a decline. But if you look at outside of that, let's look at the Aussie USD. Let's go in the Aussie USD. I mean, same thing. They're on a sort of a decline here, but the thing is, we have a direction in place. if the direction continues to go lower, I actually do like these trades because they're not really as volatile, so they're not really stopping you out right away. So they're in a low volatility play, but they are moving consistently. Now, same thing with the dollar yen. Dollar yen is moving consistently, and that's what I like. We can be on a little higher time frame for this to capture that move, but what we're going for is a direction, and we are not really as worried about volatility as we were last year when the intraday volatility was so high, which made it very difficult to jump on some of the trades. So the volatility is low. I think in a higher time frame, some things would actually definitely looks much better here. So let's take a look at some of the yen crosses. Let's start with CAD yen. CAD yen, I mean, look at that. Nice little breakout. I mean, this looks very similar with the dollar yen, with the CAD yen. I do like this further on to the upside. Look at that. I mean, we are breaking 2 months of range right here. So at this point, what time frame do I want to choose to go long? I mean, you can see that we kind of just, 99 is really the area where it got above. It's sitting at 100. I mean, right now, the next level of resistance is right here at about 101.02. But after that, I think there's definitely a little bit more room for that to rally. So there's, yen crosses definitely seems like are the one that are turning corners. So if you want to buy against the yen. If you want to sell against the dollar. It seems like that's the old play, like this is the play that we had last year. And I think that worked really well until really things changed from Bank of Japan, which is still kind of up in the air. They have been committing to the yield curve control. So I think until then, we probably see a resumption of that trade, and there's a little bit, room for this to cover or rally as we see that trade continue developing here. So I mean, look at this week. CAD yen was a great trade. If we look at the weekly percentage so far, I mean, this is a nice little bounce that we're getting here. So, dollar and yen again, like I said, that's the one that's moving. That's what we're going to focus on. But outside of that, I mean, I'm not really looking to trade the Swiss franc here. I mean, look at the dollar Swiss franc move on a weekly chart. This thing is also stuck in this little range until that range kind of work itself out. We don't want to be jumping right away into it. Maybe they're slowly carving out. But once it does, that's the time to kind of jump back in. Just the same way as the dollar yen turns around, and that's the time to kind of jump back in. I think it's a very similar way. So if we take a look at all the dollar crosses, I mean pound dollar, I mean I love the move in the pound dollar that we've gotten so far. I mean we took, let's just say, the 1 week that it took to rally, and in one single day we erased that move. Now that's really a good price action on a further downside. So I do like this on a further downside, especially if it breaks its previous support here and there's a little bit more room to follow further. All right, so let's say Eddie says the yen is so volatile. L, if you really take a look at the yen, I think it was very volatile as like where the dollar yen was stuck in this range because it was going back and forth and back and forth. If you take a look at the movement so far, once we had that breakout, I think the volatility has been much lower and is moving nicely consistently. And that's what I was saying is, if you take a look at a higher time frame, it probably looks much better to hold. I mean, look at that. We broke out. Let's just use this as an example here. We break out. We had a nice little pullback, which is a nice little textbook pullback right here, like in this window, and we got a rally again, pullback, rally again. If I go on maybe a 15-minute chart, I mean, even a 15-minute chart looks very stable. So yeah, when things are range bound, that's a bit of a volatile play. I mean, like all this time was a little bit more volatile, but once you get that the direction broken out, now we're getting more directional play. I think the volatility is not that bad right now. Every dip is being bought out. So I know with the yen, like I said before, yen has been a difficult play as it was just going back and forth. Now it start to seem a little bit better than it was, and that's the reason why. I mean, take a look at the dollar yen. It rallies and then just consolidates. Oh, that's a good price action. The worst price action is when it rallies and it just falls apart. Like that's a bit of a difficult play. Just like what we had here in the Aussie USD early this week. We rallied, we fell back, and then we rally again. Are we going? But I mean, if you get a more stability in that move, I think that's the time to make that adjustment. So I think with the volatility in the yen, I'm much comfortable now as I was just a week ago, because the dollar yen was just moving back and forth within that range, and they just made it very difficult because one day the yen will be in play and one day the dollar will be in play. And there's another thing that you need to kind of keep an eye on, which is I've noticed it so far. Let's just use an example of dollar yen. Let's go on a shorter term time frame. You'll notice that let's say overnight, like in the Asian markets, has been weaker. So yen is actually a little bit stronger in the Asian markets. And right here, you can see right around between 6 to 9 p.m. You can see the yen was actually stronger, but then that was just a buying opportunity. Now let's go back early in time. We looked at just the day before, the yen was weaker overnight, and then it just rallied a little bit. So it seems like the any sort of rally or any sort of rally in the yen is a good opportunity to sell into. Again, that's the strategy here. Any dips in the dollar is being bought, and any rally in the yen is being sold. So when I see this, then I have a direction, I see an opposite. This is again a good opportunity to kind of buy into those trades here. So I mean, same thing. You can see CAD yen. I mean, from 6 p.m. all the way to 9 p.m. It was a bit more on the sideways, more on the downside. But then overnight till in the morning, it actually recovers. So maybe you want to look at the timing for the yen when you're entering. I'm not looking to be short the yen in the Asian markets, but maybe overnight into the U.S. session. It seems like, I mean, if you look at the last week and this week, it seems like the dollar has done much better in the U.S. session compared to the overnight session. So, and again, that was the price action all last week. Every time we rally overnight, I mean, this is an example. Um, last week we rallied over in the morning, we sold off. So we kind of pretty much reversed that. Just a day before that, what happened? The Aussie USD rallied overnight this morning, and it just sold off. So and that's what happens when you're waiting for the U.S. market to open. You're thinking that, hey, I want to buy that on this pullback, but you got to understand that maybe we're seeing the opposite. Now the rallies are being sold. So last week we happened multiple times where the overnight session and the U.S. session were polar opposite. So I definitely like being long dollar, U.S. dollar in the U.S. session, and if there's any sort of rallies that I see in the other pairs, and let's say the yen is stronger than the dollar, I would love to use that as a shorting opportunity. So overnight, like I said, right now, if I'm looking to open a trade, maybe I need to give some time for some of the yen crosses to kind of develop or hold. But I mean, look at the 15-minute chart. Every sort of dip is getting bought out, so it's a nice little direction play. So if you're looking for dips, then look for the dips, and when that happens, instead of doubting and say I don't want to do that, you actually look for an opportunity to buy into around those times. All right. So that's where we are. I mean, I like I said, I'm very clear on the way I'm looking at the market movements here. I have seen a change happen in the markets in the last 2 weeks. I've been talking about it, and I think we just want to continue with that. It all comes down to then your holding period and when you're entering. And like I said, maybe you want to watch out for the yen in the Asian markets, but a little bit more clarity. So you always need to kind of pay attention to the behavior of it. What's the environment? Things are not sticking right now. So when you see those rallies, they're selling off. It's just telling you, hey, maybe that's the play I should be looking for, instead of looking at the opposite. If you want something slower pace, like I said, I don't mind taking a look at like Kiwi had. I like the fact that they've turned around, and I think at this point it's more than likely to kind of come back towards the 82 area. These could be slower plays, but so far, I mean, I think that's really where the reversal is kind of taking place. With the Swiss franc, I was definitely more excited just a couple of weeks ago, but I really am now not that. I mean, so here's the thing. Now, if the Swiss franc gets above this area or into that resistance, I think that's really where I will be looking for shorting on this level. So if we get above that level, I'm not looking for a breakout. I'm looking for to sell that. So in a range bound, that's what you got to do. Same thing with the euro. If the euro gets closer to it, I mean, you can see how quickly it did reverse. So as soon as you like this little area to break out, the breakout is not the strategy here. The reversal around these levels is strategy. So as long as things stays range bound, continue to treat it as a range bound. And when you get a confirmation like we got with the yen, then that's a time to pull the trigger. That's a time to be aggressive. So that's the sort of a game plan here for these markets. And as always, make sure you're watching the equity markets as well. So far, the market sentiment is positive, but again, that could be just that could change, very quickly. I'm not looking to be aggressive, like I said, in the markets here, one way or the other. So pay attention to what the gold is doing. You can see how gold is weakening. So this is all of these things are kind of pointing out to stronger dollar, and that's really what we're seeing here. And whenever you see those rallies taking place, for example, Aussie USD, I'm not looking, as much as I like to short it here, I know that there's a strong support line. If I go on a 4-hour chart, look at that. What's happening is finding support and the support line. So that's where you have to be a little bit more cautious in these areas. But once it really confirms that, so let's say if the Aussie USD breaks below the 68, 60 area, I'm definitely more excited for that. But let's just say in the next 24 hours, it does rally, that's the point where you can look for this rally to complete. So you got to be patient, and then look for to sell those rallies. So that's where you really want to sit on the sidelines, pick a direction, sit on the sidelines when things are not moving your way. And as soon as they kind of return back moving your way, you kind of jump back right into it. So I think that's really what we're going to see in the next 24 to 48 hours. The conclusion here is, focus on that's currency in play. Always remember to focus on what's in play. Don't get married to, hey, this is the perfect setup, because I can find a lot of perfect setups. I can find a lot of areas where I think it's going to reverse, but the timing for that is not always the best. So if you want to get the timing right, look for what's moving. Is it the yen crosses right now? Is it the dollar crosses right now? Let's focus on that. And when the tide shifts, move into something else, then that's really where we want to move with the market. So always stay adaptable into the market conditions that we are in. So thanks for joining this afternoon. If you have any questions, always reach out, ankit@maverick.com. Otherwise, enjoy your rest of the day. Enjoy the markets. Stay disciplined. That's the key here, and stay consistent. Thanks, everyone. Cheers.